So hi everybody, thank you so much for inviting me down, Mark. Linda and I were looking at the website and stuff, and just it's very well organised, so congrats. It's really an interesting event, particularly to come during the day. Used to networking in the evenings, right, Linda, and property events we go to in Scotland. We came down last night, the journey was reasonable, thank you very much. And we stayed just up the road, so fresh and ready for today. Really looking forward to sharing with you my own property experience, and also Linda later on. We both worked together a little bit up in Scotland. For me, I think the thing to put out there straight away is that my background is not professional. I haven't gone out and done a degree in investing in commercial property, right? I have done building engineering management. As I explained to Linda, I really can't remember any of it. None of it really seems to apply to anything I do these days. But it's really just to say, I'm coming from a point of view of an investor, like a lot of you in the room. And it was interesting to hear how many people are here to learn about commercials. So Linda, Kirsty, we've got our work cut out, right? So I'm hoping that through this, I'm going to give you, I guess, a look through my eyes as to what I've experienced so far in commercial. And quite a lot of people talk about commercial as though it is a strategy. Right, I'm going to do HMO, I'm going to do SA, buy to let, then I'm going to do commercial. But I'm afraid it's a bit more complicated than that. And I'm going to talk about a niche within commercial, right? I mean, I'll talk about general stuff, but really I'm going to talk about our niche, which I have to say, I didn't go out there with the absolute eyes on knowing exactly what I was doing and what I was getting myself in for. But I feel I got some luck along the way. We made some investments that have worked quite well for us. And then it's taught us how to really niche. So that'll be what I'm going to go through today. So brief bit about why to bother at all. Our strategy, which is commercial multiple occupancy. Current demand in that market, because obviously things are in state of flux right now. Okay, so how is demand in that sector? And how do we find CMO deals, or how could you find CMO deals? So first off, most of these images generally are our buildings, right? This is me up on a flat roof on on a warehouse we've got with some solar. So why commercial? Most people talked about doing residential. And certainly for us, I don't know if it's the same down here, but it was a case of if you went and had a look at a residential property, you maybe joined the queue with everybody else doing the viewing. And in commercial, it tends to be quite often you're the only one turning up. Right? There's just less competition. Not always, but quite often. And tenancy rules are different, of course. And for me, one of the silver linings, I think, of this market is actually it's quite difficult to see what's going on. I don't know if anybody's looked at commercial and trying to work out, well, actually, where do I start with this thing? Is there not any information out there? Because you go on Rightmove and you can find out, well, that's how much that house sold for, and that's how much that one sold for. Therefore, this one should be worth X, Y, and Z if I do such and such. It's a lot more opaque. Quite difficult to understand what's going on. But I do think that is why there's less people in the queue to have a look at viewings, because it's just difficult, right? I think it's a barrier to entry. And there are ways to educate yourself and get around that, but it's a barrier that's been there for a long time, and I don't think it's going anywhere soon. For me, it's a silver lining. It means that other people are maybe actually not paying attention to what's going on in commercial. Big reason I got into commercial was cash flow. Typically, people might be looking at up to 10% or something, but it is achievable to get much higher return, depending on your strategy. Larger properties give you the opportunity to scale. It's a really creative sector, not just in terms of raising finance, but just, we were having a conversation earlier on about a unit, just all the different things you can do, the different permutations. Multiple streams of income, it's a bit more passive than resi, depending on what strategy you use. And there's a lot more tax benefits in commercial. A lot more tax benefits. Both in terms of recycling your money before the taxman takes it. Kirsty, you and I were talking about earlier on, just, there's that frustration in resi. If you're doing a flip or something, quite often you have to go and give your share to your big partner, HMRC, right? And it means you reduce your momentum. But in commercial, there are more opportunities to allow you to build up more steam. So, is commercial property a good strategy? This is what I was mentioning earlier on. It isn't one strategy. It's loads of different things. Similar to resi, there's some there on this right-hand side you'll be familiar with, buy to let, you can do that. Rent to rent, people do, there are some very, very large operators in the commercial sector that actually do rent to rent. They don't actually own the properties. Sourcing, flipping, lease options, all sound familiar, all possible in commercial. Single lets, multi-lets, HMO, we do CMO, the kind of commercial equivalent, and of course serviced offices, which also we have a number of serviced offices. Lots of different strategies, some familiar. So I'm going to weave this story around my own kind of journey, right? So this is where it started for me. Hoping this will work. No. All right, never mind, I can reach. This little 2-bedroom house here was my first non-living in property. We did some up and things that you do, right? Good tax efficient way. And then I bought this one. It was a repossession. It didn't have a big queue, and I was really excited because I got 500 quid off the asking price, right? I got my below market value on this one. And I spent 5 months doing it up, which obviously was a stupid thing to do, right? But you're trying to save money. I didn't do the gas myself or the electrics, but everything else I did myself. Took ages, and eventually at the end of this, I had a monthly income of 385 quid, which at the time wasn't too bad, but you know, you go and rinse and repeat. So I went and did some more flats, houses, and I did start to get a wee bit frustrated. So for me and my wife, it was like we had a strategy. We needed some cash flow to allow us to maybe leave work and that sort of thing. And I was like, how do I get more scale? Has anyone played Rich Dad, Poor Dad, the cash flow game, right? And there's small deals. Scotland are wee deals, right? Small deals. And then there's these large deals. And I was trying to work out, how do you find these How do you find these large deals in like the real world? Because it's fine on the board, you can buy a 60 apartment building. I don't know if anyone's found that a card, a particular favorite, right? But these deals that they were showing on this game, I was like, how do you actually find these things? So I actually spent quite a long time trying to work out what it was, where it was going to be. And to me, the only sort of umbrella was, it's probably in commercial somewhere, but I don't really know what. So what I did was I went to speak to a local commercial agent. So I had a guy in a commercial surveying firm who would help me with the residential purchase. I'm sure many of you have got good relationships with agents that will help you with that. But he wasn't doing commercial, but down the corridor was the guy, the renowned guy in our market, it's particularly where you live, Linda, right? This guy who was the guru on commercial. So I phoned the guy I was dealing with. I asked him if he could set up an appointment. Didn't happen. Phoned in, left messages, didn't happen. And then one day I'm in seeing my guy, Alistair, and this other chap was in his office. Said, do you mind if you just introduce me? So we went to see him, my story, I'm doing IZ, da-da-da-da-da. And what he said to me was, in Dunfermline and the local area, which is where I was investing, there's 3 guys, unfortunately no boys, girls, 3 guys that buy all the commercial property, right? And they generally buy it off market, and they see the deals before they come on the market. So if a deal comes on the market, the chances are they've looked at it and it's probably not that good. So if I were you, I'd stick to that resi thing. And that was my advice from the local commercial guru, right? So, and I know there's some commercial guys in the room, right? And it just seemed to me there was this veil and I wasn't allowed in. So I continued networking and pursuing and trying to find a deal. And eventually, I met a guy in a gym who I got to know. I invited him to Game of Cash Flow. We have a Game of Cash Flow, there's a lot of chat around the board. Turns out his father has a building in his pension fund that they're going to have to sell. That's how random it was to find that first deal, right? And so the first deal was a multi-let office building. It was 10,000 square foot gross, 35 units thereabouts, it's a little bit less when I bought it. And we agreed a price of 240k, and the reason for that was it was producing 24 grand income, multiple of 10, often the number, certainly where I am. And so you could basically say to yourself, well, that's 24 grand that's coming in on an income. I'm going to buy it on a multiple of 10. That's not really that sexy. That's kind of I mean, it's a reasonable return, although the price of money these days is not quite so reasonable, right? But that was how we did it. And I then spent a number of years and money doing up the property, putting in double glazing, there's 88 windows in it, putting in a biomass boiler, all the different things that you would do. And this was all being done on the side as a part of my long-term strategy. But I actually had another business, which we still have, which is like a roofing merchant. And we moved that into this building, actually. So it was my main thing, and then this was being done on, I guess, on the side. And again, I was doing up rooms myself, all that sort of stuff. But what happened was, we got the income from 24 up to 80 through various things, changing the offer, improving the offer. And all I was aiming for was cash flow. However, when I found the next building, and I went to, this is how naive I was, I went to the bank and said, right, we've got this other building, this one's working quite well, do you think you can fund it? Oh, we need a valuation. Okay. So I got a commercial agent to come out and value it. Obviously not the one that told me don't bother doing commercial. And he said to me, I remember I was in the car and he said to me, he says, well, what do you think, Jerry? I'm like, well, that's kind of what I'm paying you for. And I'm not going to, and I've learned, don't ever say a number. I wait until they tell me the number. But anyway, he said, oh, I think it probably begins with a 7. I'm like, 7? Like 70 grand? What do you mean 7? And he said, no, it's probably worth about 750K. So he just did a straight extrapolation, a multiple of 10. Now, there's an argument that this building, because of the way we do licenses in it, it might be a slightly higher multiple. But nevertheless, that was the multiple he gave it. The bank gave us the funding for the next building. So that was kind of my eureka moment. It was like, so I've been trying to add this cash flow, but what I've really been doing is adding value, which allows me to leverage for the next building, something we all do in Resi. I just hadn't thought about it for this. So now that building has 2 members of staff. There's a little reception in there. There are 30 or 40 customers in there. And we have some storage containers locally to this, about another 50 storage containers. And I actually only go to that building about once or twice a year because it's now more passive because we've got a system to run it. But it is a trading, there's a trading element because there's a lot of customers in there. We don't have an agent dealing with it, it's our own employees that deal with it. So then it was building number 2. By the way, that's one of the units. So, like, it's not an office. There's loads of different customers out there for this type of product. So this one came from an agent. And he said, I'd actually looked at another building. In fact, this is this building. And I was telling you about that roofing merchant, right? So up in about a mile, half a mile up the road here is another building. And I went to our local, what do you call them now? Enterprise, they're called Business Gateway in Scotland, Enterprise Trust. So I'm starting up this roofing business, importing roofing materials, selling them in the UK. And they said, well, if you want space, you go to Rosyth, there's 3 buildings. So I had a look at them. The one up the road, this one here, and this one across the road. This one across the road I quite liked. It was an innovation centre. I thought, that sounds good. So he had to apply, and they had the cheek to say, you're not innovative enough. So I couldn't get an office. So I didn't get an office in that building, right? And I ended up taking, I thought that this one here was a bit like run down. So I took one in this other building up here. Years later, this agent phones me up and says, oh, Jerry, I believe you're in this commercial multi-let thing. I've got this building you might be interested in. So I went and had a look at it, and it was the old one that I'd been a tenant in. But they wanted like way over £1 million. It wasn't worth that. It was way out of my budget. But I still went. And we sort of spent a bit of time about what I was looking for. And then about 9 months later, he phoned me up and said, Jerry, I've got another one you might be interested in. So he took me to this one, which I thought was a bit of a dump. And I had looked at it before and didn't take an office in it, right? But anyway, we had a look at it. Now I knew a bit more about how these things work because I'd done this other building. So we ended up buying it for 325 grand on a leasehold, 175-year lease, but with an option to buy, which actually is next year. We've spent about 250K on doing it up. Only half of it was usable at the time, so there was another element that had to be done up. And it's now 55 units, 40 containers. The gross income is more than the money we paid for the building.
How many square feet is this building?
This one's gross 21,000, net 17.5. This is not your average deal, right? I mean, this is a good deal, and I've had it for a number of years. I've had this for 10 years. So time has passed to allow you to continue pushing for the market rate. But what I think is really interesting and pertinent about this building is we bought it in 2010, 11, sometime around about then, when the recession was on, and there was a lot of confusion in the market. Obviously there was no money, right? Quite difficult to get money at the time. But we really managed to, that's an unfortunate chair, isn't it? We really managed to, I was trying to ignore it, but I couldn't. So this, yeah. Just regain my composure. So I forgot where I was. Thanks, Mark. Can't remember where I was.
So you were talking about finance?
Yes. Oh, what I was talking about was the market. So we bought the building, there was only 4 customers in it. And at the time, the recession was on and people weren't making many decisions, but actually we let this building as fast as we redeveloped it because people were looking for flexibility, which was really interesting. So although the market was talking about, you know, the office is dead, nobody wants any office space, they're all down now, that kind of sounds familiar to where we are or we've been in the last couple of years. But actually, flexibility, very much in demand. So we did manage to let it really quick. So we've gone on to get another few sites. These are just some different buildings. Most of those are multi-let, there's some single let as well. And obviously there's container storage. And our rental income's gone from £385 to quite a lot more now. All of our buildings, bar this one here, are let as multi-lets and generally on licenses. We have a mixture of leases, but generally on licenses. So let's just focus a bit more on this model. And as I said at the start, I kind of fell into this. But I've learned quite a lot about it now. Been doing it for about 20 years. And I really like it. I find it difficult not to do this strategy when I'm looking at other buildings. So effectively, for me, a CMO is multiple commercial clients renting space in the same building. And the key thing is there's some communal areas and services. So if you think about a gym, if you and I go and join a gym, there's maybe 4,000 members. Some of them have got an amazing number of members, right? If they all turned up one day, there'd be trouble. But anyway, we all join a gym, pay £50, £100, whatever it is a month. But because we're all sharing it, we can all afford loads of good equipment, a swimming pool and all the rest of it. But actually individually, it's quite hard to get all that equipment. And in commercial, with the multi-let model, if you've got the communal offer, what it does is allows you to create a bit more of an arbitrage, because what you're doing is you're selling maybe a specific space for someone to occupy, but providing this other stuff on a shared basis rather than an individual basis. So often if you're renting an office or an industrial unit out in the normal land of single let, you have to pay per square foot for the toilet, the tea point, the corridors and everything else. In our model, it's slightly different. You share that with other people, which reduces the cost to the client. From our point of view as investors, I've got one boiler. I don't have 50 houses. I've got one roof, one maintenance location. It all concentrates it into one place. So this building here is 13,000 square foot. It's B-listed former mill. I've got some other slides of it later on. But the model in this one's slightly more serviced office related. We've got some meeting rooms in there. We've got a business lounge on the ground floor. All of these things are income centres. And it could be leases and licenses. We have got some buildings that are just leases, but they're multi-let and there's communal space. So why bother? Well, back to the first thing I was looking for, cash flow, cash flow, cash flow. It really can give you great cash flow. I'll repeat though, if you do this for one building, there's an operational side. You're not just taking on a building, there is operations to deal with. And I've found that if you're looking at one that's more service orientated, that the general, and I'm trying to be very polite here, generally commercial agents are not geared up for that type of space. So if you're trying to offer something with more service and more value, that sector aren't necessarily geared up for it. And I've found that they're not quite in tune for letting space as well as maybe we could, just because we tend to be on the site. It's important because what it does is it allows you to elevate the price because the service level's different. So multiple clients, lots of income streams. If somebody moves out, you might have another 30 customers. We had a warehouse, one customer had it. We bought it, 25 grand, 30 grand a year income. They moved out. Unbelievable, cheek. And so it went from producing 30 grand to below zero because now there's business rates, right? And all the other costs. So you've gone from 30 to minus 12 or whatever the number was, or 15. It's like, this is not good. So I've actually got a couple of slides on. We split that up into, I think, about 10 units. Now if somebody leaves, you're not in the hole right down here. You've just lost a little bit of income. It manages it a bit better. Went back the wrong way. Okay. Typically, problem buildings are good for this. I'll come back to that. It does mean that problem buildings tend to be better value to buy. You can build value, be really creative, and leverage for the next one, as I showed on the previous slide, and the tenancy law is quite different. So for us, a lot of our customers are not tenants, they're clients. And there's a subtle difference there. Because there are rules and regulations around landlords and tenants, both in commercial and in residential. Most of our customers are clients on licenses, slightly different. And for those of you that have a SaaS, this model can allow you to earn an income now on your SaaS. By investing, I'm going to come on to the structure, but by investing in these properties and then running the trading business as a separate thing. And it allows you to generate income outside the SaaS. Gives you the choice of where you put the money. So this is that building, the mill. We bought this one for 700, which is probably the most I've ever paid for a building, I think. We spent nearly the same again on refurbing it. I mean, we did a lot on this building. Anil, you've been to this building? Where are you? Yeah. I mean, we've from top to tail redeveloped everything in this one. We've ended up with 12,000 square feet, 30 plus units, a business lounge, co-working on another floor, private offices, venue, meeting space, all different income streams. But this building is managed by 2 people. So there's 2 people on site managing this building. And the agent said to me that in this city, he says, we're getting up to £10 a square foot now for letting space. I was quite excited, getting double figures. Some of these rooms in here are £60 a square foot. Now that's gross, there's some costs to come out of that, but it's just because it's a different offer. Smaller space as well, of course. So current income on that building is just under 380. We predict we're going to get, we basically, because of our licenses, every year we redo the license fee. So because inflation's at 10% or 11%, whatever it was, all our licenses automatically get renewed on 10% or 11%, whatever the rate is. So just with the current changes that are coming through in the next 6 months, our income will get up to 400. The net income's about 270. But there is finance on that, there's head office costs, that's just this building as a unit. That's generally that's what it's producing. Interestingly though, the ROI is quite good, but it's nothing like the ugly buildings. Brendan, you have a laugh, but that's right. The beautiful buildings can be really nice and great to have and make you feel all warm and fuzzy, but actually the ugly buildings tend to make more money. Just an observation. Oh, and by the way, there's been quite a number of buildings around this that have been bought and converted to resi. So we did the numbers on this. I didn't actually look at it from a resi point of view. My default is, can I do this as multi-let? But we did the numbers, and by the time your HMRC partner took their cut, you actually would make about 150 to 200,000 pounds on doing a residential conversion on this building. But this one makes that every year. So don't use the default of, oh, well, I'm going to go and do commercial to resi. As Kirsty said, that's not what we do. That's a slightly different, it's a model that works, but don't use it as a default model, right? Have a look at whether it can work as commercial. Income can be really good. There's some more shots of that building. It's one of our larger meeting spaces. This is a unit we were just refurbing recently, moved a new customer into. This top floor, there's some micro units. I mean, literally one person can go in there and you could not swing a cat. But, not without hitting walls, but some people, they just want, so there's this space outside. They want to be able to meet and mingle with other people, but they also want to go in and close the door and work, but they don't want to work at home. They want to work near home. So a lot of these units are not paid for by the individuals, they're paid for by the HR department, because they found themselves a small unit near home where they can concentrate, get good Wi-Fi and all that sort of stuff, and meet other human beings that are doing stuff rather than toddlers or whatever. And it really works well as a model. So just quickly, this is our business structure. There's quite a number of reasons for this, but I just thought I'd introduce you to this concept. So the first building we bought it. We started immediately invoicing customers and dealing with suppliers directly from that company. And then over time, I thought, do you know what? There's a bit of risk here, because this asset has customers, suppliers, right, staff, any one of which could turn around and say, you've done something wrong or whatever. And it just felt a bit more risky. But also, it meant that if I wanted to do any JVs, that involved that operating side, it was in with the bricks and everything else. So actually, what we've done now is we have an operating business, which is called Liberty Space for us, which basically has all the contracts, leases, customers, staff, suppliers, and everything. But that business pays a rent to our holding companies. So this is where our buildings are in different companies, or if you have a SaaS, you could potentially hold the property in your SaaS. And the way SaaS works, Bryn, correct me if I'm wrong, but as long as you're getting market rate. So if you've bought a building, it was £100,000 income, then that should be going to the SaaS. But anything else you generate in your operations business is now your choice. You could pay it in as a contribution, or you could keep it as an income outside. It does allow you also to do joint ventures. So we work with a few commercial investors, helping them get started and do this model. And there are a few that say, well, this is all great, but could you maybe run the building? Well, I wouldn't be able to do it here, or I wouldn't want to, but with an operating company, it allows you to do other deals and joint ventures and all that kind of stuff. Not something you have to think about to start with, but it just brings some interesting quirks. And this is the clever bit about it. So if those of you with a SaaS, option one for that building that I was showing you is that the agent was saying it was about £10 a square foot. Well, if we said it was 11, gross footage, because that's what you'd multiply it by, is 13.5, if you could find one customer for it, which would be challenging. So the net income would be 150K. Now, ideally it'd be a lease, 10-year lease, you never go back, right? Quarterly, send me the check, everything else, and wait till they delapse, please, right? But actually, over here, by introducing the operations side, there are some costs. So our income I showed you is about 375. This slide's obviously a bit older, but 350 as the gross income. The building costs about 100 grand to run a year, which means there's 100 grand left over. So if you're doing the SaaS model, introduce you to, this is not one of my projects, this is somebody I helped who did a project over in Stockport. John did this all the wrong way around. So he managed to find this building. The guy that owns it actually runs a scrapyard. It's round about. I mean, it's not the most salubrious looking building, right? But I did say to you, the ugly buildings tend to work better, right? So this one, he had a group of artisans who were renting somewhere else, and they were desperate to work with him because he does a lot more shows and fairs and things for this team of artisans. And he found this building, and he he felt confident with the guy that was selling it. So he started going in, got the keys and started going in and redeveloping it, right? You don't even own the bloody thing yet. To be fair to him, the deal happened, and the very day the deal happened, 21 clients moved in the building. Brilliant. Now, he'd found the customer first. Great strategy in commercial, find the customer first. And his initial income brings an ROI of about 14%. He'll be able to tweak that over the next year or two. And there is a basement which the yard was continuing to use, but he should be getting. So the ROI on that one should be about 18%. I guess it's an entry-ish level project, because there's certainly a few houses on the market that cost more than 190,000, right? So market demand. What is a good commercial property yield? Depends which paper you read. Depends which person you're talking to. It does depend on time and money. So commercial is often looked at as a passive strategy. I used to think, I'll do all my stuff in resi and my other business, I'll generate money, and then I'll park it in commercial and earn a passive income. That was my strategy. It was like Monopoly, where you're like, I've got to do all the green stuff, and then eventually I'll find one of these red ones and earn passive income, right? It's the same like the cash flow game. It's like, I'll do this here, get trading, then I'll park money in commercial. That was my naive thought about commercial. But actually, it can be really creative. And you have an ability to not just put money into it, but also time, creativity, and it can generate much higher returns depending on what you're putting in. But if you're looking, as I was initially, at just passive strategy, then your return might be 4% on a really posh area to maybe 10% in a less salubrious, sometimes a little bit more. But with real creativity, you can generate a lot more. You will find that with higher return, of course, is higher risk, right? So the whole thing is, how do we mitigate that risk? Interestingly, just in terms of the noise out there, macroeconomics, headlines, particularly during COVID, were the high street's dead, everybody's working from home. I mean, everybody who's my age on LinkedIn was saying, yeah, the office is dead. That's because they maybe had a spare room in the house. But a lot of people don't. Or they've got kids, or they're in a flat and they want to get out. You know, it doesn't work for everyone. And we've certainly found that, I'm going to come on to occupancy of our buildings, but we've found that there's a lot of people that do like the idea of working near home, but not in it. It comes down to microeconomics. What's going on in your patch? We're talking to a few people earlier on about investing in different areas and stuff. We invest within about an hour of where we live, because I get to know what's going on. I can understand the market. If I see a deal, I can evaluate it much quicker because I'm there, and I've been doing a lot of research on other stuff, because I know what's going on under the surface. Whereas if I was looking at investing in Newcastle, and then the next week in Luton, and then in Birmingham, and then where we are, not only do I not really understand that, now I can obviously employ people to help me with that, but also my team. My team are local. If I go down to Birmingham, I'm going to have to set up a whole new team to manage this building, to do this process. So for me, it's really important to focus in on a target market. Even if you don't end up investing there, it teaches you loads about how to invest and what to look out for. And what you start to discover is what levels of demand there are. So I've invested in a few buildings in locations where there's actually a lot of office space available. And the agents will tell you, oh, there's way oversupply of office. Why are you buying there? You should buy here. It's the usual thing, right? If you buy here where it's a 4 or 5% return, you know, you'll keep tenants for ages. It's a really popular area. Yeah, but there's no risk. That's why the yield's so low. I want a higher yield. So it's trying to work out, why is it that in some areas, some buildings are empty for years? Is anyone on the way here driven past a building that's been empty for a while, and you're trying to work out, why is that thing still empty, right? It's probably in a rates trap. Probably somebody went bust. The regional client it was built for no longer exists. And the building has performed a function that is no longer required. Our job as creative people is to try and work out, how do I change that into what market demand is? The thing is, we have to go and work out what market demand is, because there'll be other buildings next to it that are buzzing. They're doing really well. They're still in commercial, they're still offering office space. What's the difference? So we have to try and work out what it is people are after, right? Because sometimes the market doesn't have to be growing. Like, you know, we invest in a market where it's static. There's no growth in the village or the town. But actually, the pie is the same size. I just need to make a better offer to get a bigger piece of the pie. So it's about understanding the market. Just one last bit on that. Or a little bit more deeper about that. Fab, okay. Customers make decisions based on lots of different factors. Often people think it's about price and location, but actually there are other levers. So if you think about it, if you've ever been out looking for space to work from, you might be looking obviously at a different sector. So it might be industrial, it might be office, whatever your sector is you're looking at. But what about the contract? Like, is it a lease? Or is it a day rate? Or is it a license? You know, there's a lot of permutations of contract types. And it could be 5 years, it could be a year, it could be a month. They're all at different value points. But customers are interested in that. Second thing they're looking for is the quality of the space. Is it really functional, because that's what they're looking for? Or is it actually 5-star? What is it they're looking for? And then the other one that often just kind of gets passed is, what about the size? Most people, when they're starting out smaller businesses, are looking for smaller space. And the struggle they have is, I don't want to take on a lease for a big unit with a toilet and a tea point and corridors and a front door and security system and management. I just want an office, please. And you can worry about that. And there's a market there that's not looked after very well. So this building here, again, not one I bought, but one of my clients bought just over or up the road in Wales. This building was sitting in a pot of industrial buildings. So an agent brought it to him, and in fact, he was looking at another building and he said, do you have anything? And he gave a description, anything that's multi-let, partial income, blah, blah, blah. And the guy said, well, there is this one sitting in this industrial portfolio, and the landlords were trying to sell industrial property with this thing in it. It was being marketed in the wrong place. Secondly, the guys that owned it were trying to be really passive, and they didn't look at the market. So actually, he bought it on a multiple of 10, based on the rental, but the rental was down at 12 or 13 pounds a square foot, and when you did your market research, everyone else was charging 25. But the value that he paid was based on that, because that's how it works, right? So what he's done is, as those leases have come up, he's just been changing them to £25. Totally transforms the value of the building. But it was basically two things. It was marketed wrong or incorrect pricing, because the customer who owned it didn't understand the pricing model. And it was a problem building because it was in this portfolio of industrials and it didn't fit. Quick slide on demand. We've been doing this for about 20 years, but actually the years I've got data, over 14 years, our average occupancy is 94%. I know, I couldn't believe it. Our worst for 1 year, because sometimes it will dip down, you get a big customer moves out, but then you fill it back up. The worst we ever had in 1 year was 80% in one building. But in general, our average is 94. Our worst year was 2018, not 2020 or 2021, which you would maybe think it was. Those years were 93 and 94. And of our 7 locations, that's our occupancies right now. It is an in-demand product. Our average in our mature locations right now is 97%. But we are tiny. You know, our portfolio's just over 100,000 square foot. It's in one tiny part of Scotland. But this sector is right throughout the nation. How do you find deals? Pick a specific area, network with agents. I haven't got time to go into that, but network with agents, research the competition. Yeah, if you take a copy of that slide, This is just the process to go through. And the thing about competition is you look at the competition, often they could be a potential purchase because they're maybe just not being run right. Of all the buildings we've bought, only one of them was completely vacant. All the others had partial tenancies.
We'll pull this line back because we'll do a Q&A afterwards and lay that up.
Cool, all right. Find sourcing agents, look for problem buildings, blah, 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 blah. I do have a podcast. Those of you who don't know, Commercial Property Investor podcast. That's the QR code. Again, I guess that will come up later on. Yeah, thanks, Mark. Yeah.
Well, there's a great one about how to do this with the SAT.
There are some people in the audience that have been on the show yet. I'm going to nip through this one. That was an industrial one. This building, actually, do you know what? I'm going to go back. Mark, forgive me. Do you remember I told you that we were told we weren't innovative enough? Right? So years later, the innovative location had gone bust because they weren't innovative enough. And I followed this building for a while. I mean, it took me 5 years, but I did buy it. And we moved the uninnovative business, which was still going, into the warehouse the very same day we bought it. Because they just hadn't, it was run by a public body, and they just didn't really understand how the market worked. And they were obviously turning away customers because they weren't innovative enough. I mean, ridiculous, right? But this one I bought in 2014, I think it was, for 340k. Prior to 2008, I'd looked around this and the guys that owned it wanted $500,000 just for the warehouse. But stuff happens, right? And then we ended up buying the whole lot for 340. No refurb costs because we got dilapidations from that guy. That company moved out of the warehouse, which was really good. We reinvested that money. Current income, ROI on that one's better. The last valuation was 1.1. I don't know where it is right now. Not got time to go through that. That was the warehouse, one single customer. We just subdivided it. Mark, did we speak about containers?
No, I listened to you on
Right,
podcast.
Okay. Another really interesting way of getting into this market. Now, buying containers and storage is not an investment as in terms of bricks and mortar. You might buy the ground. Your SaaS could buy the ground, right, Bryn? But it can't buy the containers, the movable whatevers. But actually, we've got containers at 40 years old. I mean, they are pretty robust. But anyway, this one, bought off somebody I know, again off market, 150k, 47 containers, 100% occupied for the last 3 years that we've owned it. We bought it during COVID. And it was the same thing. They just weren't selling the container space at the right market rate, and we've just been slowly increasing at market rates about 58. It's a really interesting business, container.
They have the containers as they are. You haven't done anything to them.
Nothing to them. Nothing. Just change the price.
Yeah, I've seen a lot of people that do where they turn them into offices and all that sort of stuff.
Yeah. Yeah. Just a small one. Customers of ours have bought. They had 10 vacant units upstairs. Were a bit scared when they bought it. It was producing £1,750 on the ground floor. So there was a bit of cover there for the finance, but they were scared. But they have now let all 10 units upstairs. They wanted one themselves, and I said, it's expensive to have your own office. You really should sell it. And they've sold the space. And their income, there's about £2,000 a month net after finance on that building. Last slide, promise. Rumbling tummies. For me, there's 4 things that you need to know about this sector. So the first thing is we all need to know how to find and buy buildings. And there are experts out there to help you do that, okay? But that's only the first bit. The second thing is you need to have somebody on your team who understands compliance and understands how to optimize these buildings to make them work best. Then, of course, you're going to have someone to do the redevelopment. And then you're going to need somebody to do the operations. And there are people that are in this sector and they will just do one of them. They might just do the operations. They might do building. They might just do the finding and buying, and they leave the rest to somebody else. The thing is, in order to find a building that's right, you need to know how it operates. In order to do the design and compliance, you need to know how they operate. And in order to do the redevelopment, you need to know how these things work. So although those are independent skills, you just need to make sure if you haven't got the right skills in some of those areas, you need to plug that gap. Because I've worked with a few people who've gone and bought multi-let buildings and they haven't run them before. They do the redevelopment and then they're like, shit, where's the plugs? Or, you know, why is that light not? Just all the little granular things that optimize buildings can sometimes be quite costly because you have to take walls down and change things, right? So it's just important to think, what are you good at and what other help do you need? Because anyone can do this strategy, but you just need to plug those gaps. So that's me. You'll find me on the podcast. That QR code just takes you to the podcast and a few other things that we do. That's the Instagram account. We do some training on CMO, as one does in these things. We do them quarterly. So there's a little bit of information about that too.